Namaskar, you're watching the Hans India, and today we decode the biggest tax reforms in India's history, the Next-Gen GST reforms announced at the 56th GST Council meeting in New Delhi, which was chaired by Finance Minister Nirmala Sitharaman. Now you remember, Prime Minister Modi had promised his citizen-friendly changes from the ramparts of the Red Fort this Independence Day, and now the Council has delivered. Let us talk about common man commodities first. Everyday essentials like soaps, shampoos, toothpaste, hair oil, kitchenware, bicycles will now be taxed at 5%, down from earlier slabs of 12% or 18%. In fact, even bicycles parts will now have 5% GST from 12%. And if we talk about the impact, well, noticeable drop in monthly household essential expenses. Food and packaged items, well, items like butter, ghee, cornflakes, cereals, namkeens, sauces, chocolates, and coffee now taxed at 5% instead of 12 to 18%. Indian breads, roti, paratha, chapati, khakra, pizza bread, UHT milk, paneer, and chena are now exempted from GST. Impact, you ask? Well, eating at home and stocking snacks becomes cheaper. Well, life and health insurance premiums, term plans, ULIPs, family floaters, senior citizen policies will now face 0% GST. A total of 33 life-saving drugs have been made GST free. 3 more specialized medicines for cancer and rare diseases, etc., also now stands at 0%. Other medicines and medical devices like diagnostic kits, glucometers, bandages face 5% starting from September 22nd, down from 12 to 18%. Impact, substantial relief for families on health costs and insurance. Now what about travel and automobile? Well, small cars, be it petrol, LPG, CNG up to 1200 cc, diesel up to 1500 cc under 4M now will be charged at 18% GST, down from earlier rate of 28% plus cess. Motorcycles, on the other hand, equal to or lesser than 350 cc, likewise now taxed at 18% from 28%. Buses, trucks, three-wheelers now at 18% GST. Larger cars, SUVs, high-end motorcycles, bigger or greater than 350 cc, luxury vehicles, yachts, helicopters, new luxury since slab at 40% GST when it comes to air travel, economy class tickets will now only attract 5% of GST, down from 12%. Business class tickets, on the other hand, will be taxed at 12% compared to 18% earlier. Now moving on to consumer electronics and appliances. Goods like ACs, dishwashers, TVs, regardless of size, and monitors are now taxed at 18% GST, down from 28%. Whereas mobile phones, laptops, digital gadgets mostly remain unchanged, likely at 18%. Impact, appliances get cheaper. Gadgets stay same price-wise. Now talking about education and stationery. Well, exemptions that is of 0% GST now extends to education supplies such as exercise book pages, maps, globes, pencils, erasers, crayons, scissors, tailor's chalk, etc. Geometry boxes, school cartons, trays, however, has been reduced to 5% from 12%. Now, if we talk about online courses or digital education services, those remain at 18% GST. The impact, you ask? Students benefit via cheaper supplies. E-learning remains equally priced. Now coming to the hospitality and tourism. Rooms priced below 1000 rupees per night will remain GST free. Budget hotel stays between rupees 1000 and rupees 7500 per night will now attract 5% GST from 12%. Luxury hotels, which charge more than rupees 7,500 per night remain unchanged or within higher slab. Impact: affordable travel sees direct savings. Now moving on to the building materials. Well, the reduction in GST on cement and construction materials is set to give a major boost to the housing and infrastructure sector. Cement has been brought down from 28% to 18%, while items like marble, travertine blocks, granite blocks, and sand lime bricks have been reduced from 12% to just 5%. Similarly, bamboo flooring and joinery, along with wooden packaging cases and pallets, will now attract only 5% GST instead of 12%. These changes are expected to significantly lower construction costs, making home ownership more affordable, spurring real estate demand, and creating fresh employment opportunities in the construction industry. Now moving on to textile and agriculture. Man-made fiber and yarn GST slashed to 5% from 12 to 18%. Big relief also comes for farmers as agriculture machinery including tractors, threshers, compost machines, sprinklers, drip systems, beekeeping gear will now have only 5% GST, down from 12%. The government chose to not make them completely tax-free as that would increase costs for manufacturers, eventually push prices for farmers. The impact will be that lower costs for farmers, textile industry gets boost. Coming to the services sector, beauty wellness, salons, gyms, yoga centers will now be charged 5% GST, down from 18%, whereas digital marketing, IT consulting stay at 18% GST and remains unchanged. The impact will be that personal wellness becomes more affordable, professional services unaffected. What stays the same are the alcohol, petrol and diesel that remain outside GST. Luxury goods, high-end gadgets, jewelry, etc. see no major change unless covered by the 40% slab. Digital services like Netflix and other OTT continue at 18% GST. Now let us also talk about the implementation of these slabs. The two slab system, 5% and 18% plus the new 40% sin/luxury slab takes effect from 22nd November 2025. That is exactly when the Navratri begins, the festive bonanza truly. What will be the impact on the existing stock and invoicing? Well, supplies made before the change but invoiced after, the rate depends on when the payment is received. Old stock can still claim input tax credit if originally taxed correctly. As you can see, we have two columns, category and the GST change to household essentials 5%, staple foods and Indian breads 0%, insurance and select medicines 0%, other medicines and devices 5%, small cars, two-wheelers equals to or less than 350cc 18%, bigger vehicles, luxury goods stand at 40%, electronics/appliances 18%, education, stationery 0%, digital services 18%, wellness services and fitness 5%. That was a quick summary. Now moving on to the FAQs. Here are the key frequently asked questions for you. Now, number 1. When will GST 2.0 come into effect? Well, it starts from 22nd September 2025. How many slabs before versus after? Earlier, there were 4 slabs, 5%, 12%, 18% and 28% plus cess. Now, it has been simplified to 5%, 18% and a new 40% special slab. How will old supplies/invoices be handled? Well, if the payment was received before the change, older rate applies. Otherwise, new rate applies. With this new change in effect, input tax credit remains valid for stock bought earlier, but no later than September 22nd. Now, what happens to insurance premiums and cigarettes? Insurance premiums are now GST exempt. cigarettes and tobacco products are placed in the 40% slab, becoming costlier. Will large cars attract cess? Well, no. There is no more cess. The reform replaces it with a uniform GST rate of 40% for mid-size and luxury/large cars. So yes, even at 40%, the cars will be cheaper as the cess has been removed, replacing the earlier 28% GST plus 17 to 22% cess. What happens now that GST on insurance premiums is 0%? Well, with GST reduced to zero on premiums, insurers won't collect GST from customers anymore. But at the same time, they also won't get ITC on the GST. They pay for their own expenses like commissions, ads, office costs, etc. Why does this matter for customers? Well, if insurers lose the ITC benefit, they may pass those extra costs back to policyholders. So while premiums are GST free, insurers might slightly increase the base price to cover their operational costs. Is there any change in the threshold for registration required for goods under CGST Act 2017? Well, no. There is no change in the threshold. Moving on to the next question, where will be the revised GST rates be notified? Well, the new rates will be published on the CBIC website. I hope this explainer helped you in many ways. And with this GST makeover, dubbed as GST 2.0 or the Next-Gen GST, is the most sweeping overhaul since 2017, cutting down slab complexity and lowering tax burdens on essentials while consolidating more luxury goods into a high tax bracket. It's built to simplify, stimulate consumption and support households and key industries. To sum it up, these next-gen GST reforms are designed with a common man first approach, which was due for a long time, really. Household goods are cheaper, medicines and health insurance are cheaper, cars, bikes, appliances, travel cheaper, but luxury digital services and gadgets mostly remain unchanged. This marks the beginning of a simple tax better life regime. So tell us, which of these reforms have impressed you the most? Cheaper medicines, lower hotel rates, or affordable cars? Drop your thoughts in the comments below and don't forget to like, share, and subscribe to the Hans India for more such deep dive explainers. I am Gyanishala Malik. Until next time, thanks for staying tuned. See you again.